Hey guys, this is Yash from Equitymaster, making markets simpler for you. To stay updated, don't forget to subscribe to our channel and like this video. Before we move on, please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. In today's video, I'm going to talk about turnaround stocks. You see, the financial year 2024 was remarkable for most of the Indian listed companies to say the least. In addition to benchmark indices continuing the incredible run, a cohort of companies have been buzzing in the market due to their turnaround stories. The earnings scorecard of India INC is much better than expected and companies have kickstarted the new financial year on a good note. So, let's look at FY24's turnaround stocks that could do well in the coming quarters. These companies have turned profitable after 1 year of loss in FY23 or repeat years of losses. First on the list is Indigo. InterGlobe Aviation, or commonly known as Indigo, is India's largest passenger airline operating as a low-cost carrier. Serving 86 destinations including 24 international destinations, it provides passengers with a simple unbundled service. Indigo is currently the 7th largest airline in the world, measured by daily departures, and the first Indian airline with a large fleet of 300 plus aircrafts. After consecutive losses for 4 years, Indigo recorded an annual net profit of around Rs 82 billion in financial year 2024. Due to favorable macroeconomic trends in the country, such as the rise in per capita income and favorable demographics, new travel trends are emerging. These are experiential travel, growth in spiritual tourism, and increasing demand for international travel. All of this has helped Indigo turn around and drive its revenue to new heights. A stride forward in this direction was the company's order for 500 Neo family aircraft announced in June 2023. This was not just Indigo's largest order, but also the largest ever single aircraft purchase by any airline with Airbus. During FY24, it launched 7 new international destinations across Asia and Africa and also expanded direct routes by 25%. On the international network side, Indigo's codeshare partnerships continue to grow. It saw an impressive growth of around 45% in number of passengers flying through codeshares in financial year 24 compared to last year. The company also signed a few codeshare agreements with British Airlines, Qantas, and Malaysian Airlines. As far as future plans are concerned, Indigo will be launching a tailor-made business product on the busiest routes and business routes of the country before the end of this financial year. There is an ever-growing need for premium travel in India, and launching this new product will create a desired option for many who are aiming to travel business. The expansion plan will be released in detail later in August this year. The company's current pending order book of a little over 1,000 aircraft to be delivered until 2035 provides long-term visibility. So safe to say that there's nothing but blue skies ahead for Indigo. Moving on to the next stock on the list, InfoEdge is India's premier online classified company with a portfolio of brands. It owns various brands in different fields like Naukri.com, 99acres.com, Jeevansathi.com, as well as Shiksha.com. It also acts as an investor and has invested in many startups in the online space and is actively growing its investment portfolio. InfoEdge has recently caught the market's eye with its impressive financial performance. InfoEdge reported a net profit of 603 million in the fourth quarter of financial year 2024, bouncing back from a loss of 2,729 million during the similar period a year ago. The company earned Rs 6,574 million in revenue from operations during the quarter, with an 8.7% year-on-year growth increase. In FY24, InfoEdge earned a total profit of Rs 5.7 billion, a turnaround from a loss of Rs 1.7 billion incurred in FY23. The excellent execution in both 99 acres and Jeevansathi helped the company reduce operational losses in these verticals from Rs 1,900 million in FY23 to Rs 680 million in financial year 2024, with Rs 210 million cash generation in the fourth quarter. Going forward, the future looks promising for InfoEdge. The company is optimistic about the recovery in recruitment sector and expects continued growth in the coming years. Moving on to the third stock on the list, Swan Energy was incorporated in 1909 as Swan Mills, a manufacturer and marketer of cotton and polyester textile products in India. Over the years, it diversified into real estate and it's developing a floating storage and regasification unit-based liquid LNG import terminal. Swan Energy saw a remarkable growth in its consolidated revenue for the financial year 2024 after back-to-back losses in the past 4 years. This dramatic turnaround is reflected in its share price performance, which has also shot up nearly 3 times in the last 1 year. The company's revenue from operations surged nearly 252% to Rs 51 billion in financial year 24 compared to Rs 14.5 billion last year. In FY24, net profit stood at rupees 5.9 billion, marking a significant turnaround from the net loss of rupees 610 million in financial year 2023. The win beneath Swan Energy's wings came from acquiring Veritas India, a chemical, paper, polymer and rubber distributor. It acquired a 55% stake in Veritas in financial year 23 for rupees 1720 million to use its distribution network to expand in the oil and gas space. Veritas' historical performance underscores why Swan Energy chose to invest in it. In the last 12 months, most of Swan Energy's revenues came from Veritas India. The company recently won the bid to acquire the bankrupt Reliance Naval for rupees 20 billion, aiming to right the government spending in the defense sector. The company has initiated the process of revamping the Reliance Naval shipyard infrastructure facilities to make it more operational, as well as building a proficient leadership team. Additionally, it is also aggressively working on the completion of LNG terminal project. Fourth on the list is Tejas Networks. Tejas Networks is a Tata Group company which designs and manufactures wireline and wireless networking products with a focus on technology, innovation and R&D. Tejas Networks turned profitable in quarter 4 as it reported a profit of rupees 1470 million as against a loss of rupees 115 million in the corresponding quarter last year. Revenues jumped multifold to rupees 132.7 billion against almost rupees 3 billion. This is an up move of 168% year on year. The company received rupees 326.6 million as incentives under the PLI scheme for telecom and networking products. At the close of FY24, the company's order book stood at close to somewhere rupees 82 billion. The company has ramped up its BSNL 4G and 5G RAN shipments and delivered a large volume of IP MPLS routers for the backhaul network. The company was granted 22 patents in quarter 4. The total count now stands at 335. With an order book over rupees 82 billion, the company is well poised to capitalize on the upcoming opportunities and utility network upgrades in India and across the globe. Tejas Networks FY25 revenue is expected to be 4 times the FY24 revenue due to the BSNL and BharatNet order execution. Last on this list is IFCI. IFCI, previously known as Industrial Finance Corporation of India, is an Indian government-owned non-banking financial company established to cater to the long-term finance needs of the industrial sector. The stock has been in the limelight ever since the company posted a profit after consecutive years of losses. The key driver for most equity market returns is earnings growth, and this was also true for the PSU's fortune reversal. It made losses continuously in 5 years from FY19 to FY23 until it became profitable this year. Its consolidated net profit stood at rupees 2.4 billion as against a loss of 1.2 billion during FY23. Revenues for the current year rose 33% to rupees 20 billion from 15 billion in FY23. An increase in non-performing assets forced IFCI to shrink its credit extension business recently and expand into advisory services instead. Hence, its appointment as a project management agency contributed significantly towards profitability achievement. As a government advisory, IFCI has been appointed as the project management agency for various product-linked incentive schemes. According to reports, IFCI may also merge with its subsidiary, Stock Holding Corporation of India. Stock Holding is among India's largest depository participants, the largest premier custodian in terms of asset under custody, and the highest profit-generating entity under IFCI's fold. According to its annual report, the company holds shares in LIC as well as the unlisted National Stock Exchange of India, or NSE. As and when NSE decides to list on the exchanges, IFCI could be an indirect beneficiary via its holding in Stock Holding, which has shares of NSE. Back in 2019, IFCI had already realized some rupees 8.1 billion from the divestment of its 2.4% stake in NSE. So there you go, these were the turnaround stocks to watch out for. Apart from the above, here are some more companies that turned profitable in financial year 2024. To sum up, earning big wealth from stocks is all about identifying the next turnaround play like Suzlon. However, a lot of turnaround stocks that are speculative in nature fail to turn and disappoint investors in a big way. There's a much greater risk of permanent loss of capital in them. Always remember Warren Buffett's 2 rules of investing. Never lose money, and always remember rule number 1. The road to a potential multi-bagger shouldn't necessarily be an all or nothing game. If you think that's the case, and if you think you may lose your entire capital, then label it that way and invest accordingly. This way, while you still may enjoy the upside, you wouldn't lose a lot of capital as well as your sleep if the speculation goes south. That's it for today. If you like this video, do share it with your friends and family. I hope you have a profitable trading day. Happy investing.